Welcome to the Daily Business and Finance Show. Oil price dilemma, demand versus supply, Apple's trade-in boost amid sales slump, U.S. banks' resilience post-2008 GFC, Novo Nordisk's weight loss drug heart benefits unveiled, REITs stumble on mixed earnings results. ETF movers of the week, Labu, Boyle, and Dust. ESPN BET's launched Disney and Penn in the spotlight. Google eyes investment in AI startup Character.ai. Stay tuned after this short ad break to delve deeper into these headlines and more. Crude oil futures experienced an increase on the last day of the week. However, they marked a third successive weekly decline due to worries about demand rather than disruptions in production. This situation arose as refiners from China requested a reduced supply for December, and there was a drop in U.S. consumer sentiment for the fourth consecutive month. Despite witnessing a 1.9% surge on Friday, crude concluded with minus 4.1% for the week at $77.17 per barrel, paralleled by Brent crude, which also fell by 4.1%. Diesel, an essential economic fuel, underwent a substantial decrease, reflecting Europe's diminishing industrial activity and fuel usage.
Apple has boosted the trade-in values for previously owned devices, even those from Android. This decision comes on the heels of a 1% revenue decline, which equates to $89.5 billion for the quarter that concluded in September. The move is seen as a response to worries about how well their latest iPhone series and revamped Macs are selling. However, it's worth noting that Apple's stock value has surged by more than 45% within this year.
The United States banking system is potentially at risk due to elevated interest rates, as stated by the Federal Reserve Bank of New York. Such a scenario could result in funding strain and diminished capital levels for certain institutions. However, despite these apprehensions, the present risks remain lower than those that were evident prior to the financial crisis of 2008. Large-scale banks such as JP Morgan, Citigroup, and Bank of America are less vulnerable compared to smaller regional lenders. The current situation is under careful scrutiny through various indices that measure capital vulnerability and liquidity stress.
Novo Nordisk, a Danish pharmaceutical firm, has announced that its FDA-approved weight loss medication, known as Wegovy or semaglutide, has demonstrated cardiovascular advantages in a Phase 3 trial. The trial revealed a 20% decrease in risk for major adverse cardiovascular events such as stroke across all demographics and levels of obesity. The firm anticipates decisions on the expansion of semaglutide labeling for cardiovascular risk reduction from both the US and EU next year.
This week witnessed a dip of 2.62% in real estate investment trusts, also known as REITs. The third quarter earnings were mixed for Orion Office REIT, National Health Investors, and Starwood Property Trust. Tanger Factory Outlet Centers experienced a downgrade despite surpassing the expectations for the third quarter. On the other hand, Realty Income performed exceptionally well and even raised its guidance. In contrast to this, the S&P 500 saw an increase of 1.31%. This happened as Treasury yields stabilized following a significant bond sell-off which was triggered by a weak government auction.
This week in the financial markets, there were significant gains observed in ProShares ultra-short Bloomberg Natural Gas, Microsectors Gold Miners 3x Inverse Leveraged Exchange-Traded Notes, and AdvisorShares MSOS 2x Daily ETF. On the other hand, ProShares Ultra Bloomberg Natural Gas and Microsectors Gold Miners 3x Leveraged ETN underwent notable losses.
Disney's sports broadcasting network, ESPN, is set to launch its digital sports wagering platform named ESPN BET in 17 states on the 14th of November. The service will utilize official odds provided by Penn Entertainment, which has obtained exclusive rights to the ESPN Bet trademark for an initial period of 10 years. This introduction is strategically timed ahead of a bustling week of games during Thanksgiving and is poised to rival well-established platforms such as FanDuel and DraftKings.
Reports suggest that Google is currently negotiating to invest a substantial amount in the chatbot startup, Character.ai. This investment could potentially increase the startup's value to more than $5 billion. The investment might also fortify the ongoing collaboration between Google and Character.ai, as Google is already utilizing Character.ai services for model training purposes. This development comes at a time when tech companies are progressively exploring AI-powered chatbots to enhance user engagement.
And that's a wrap on the Daily Business and Finance Show. Stay savvy, keep investing in your knowledge, and we'll meet you back here tomorrow. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow dawns, take care and goodbye for now.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.